Good morning. Good morning, everyone. It's Don. It's Sunday, November 14th, and I'm making this video just for our annual members. And as many of you have been doing and giving us feedback on, many of you have been making a push to do more with the machine, more automated trading. We have suggested, we have encouraged folks in a simulated environment to pick a strategy for at least 1 week to run that strategy without any optimization, without any bells and whistles, just to see it going in and going out on whatever market you might choose, on whatever interval you might choose, on whatever chart you might choose, just so that you can see your account and the volatility in your account for better or for worse, with no expectation to make money. You might make money and you might lose money, but just to have that experience to see. The second piece of that, of course, was to come back the second week, and then hopefully it was a strategy that you kind of got comfortable with, and maybe an interval you got comfortable with, and the leverage, that maybe you had to lower the leverage, but you get to a more comfortable place. And during that second week, we invite you then to try to apply your acquired trading skills and tools of your choosing to maximize your profit factor and also minimize the amount of time you're actually in the market. You want to have the best of both worlds. Maximum profit factor, minimum time in the market. And see what you see, experience what you experience. And we've got back some wonderful feedback, and folks have learned a lot, and I think are on balance doing very well. One of the things that has been commented on by everybody, though, and this is where it was supposed to go, is on the various aspects of trading. When you think about your own trading, and then when you ask a strategy to do the trading, if you are critiquing that strategy, you are going to be critiquing it. You are going to be saying, hey, Mr. Strategy, you should have done better. You should have stayed in the trade. You should have done this. You should have done that. I mean, that's to be expected. You should be critiquing these strategies and seeing what you see. Also, too, though, the strategy, if the strategy could speak, he might be critiquing you. Like, hey, Mr. Trader, if you had only let me run, I would have made that money. Or if you had only done this, or if you had only done that sort of thing, right? So it's a give and a take. In terms of, there is no holy grail. There is no perfection. There is, remind everybody, there is no strategy that is going to work perfectly every single day, every single week, on every single market. Doesn't exist unless you're getting tomorrow's newspaper today, like Citadel. Nor is there any trader, including moi, including me, that is going to win on every single trade, every single day, every single market, every single week. Doesn't happen. Okay, so it's important as we move to try to develop confidence in each person. I say this with as much respect. I understand the difficulty in this. I understand the emotions in this. Been through this many times with members, with Susan, and even my own trading. It takes time to develop a consistency, and it's the consistency that will lead to the confidence. And once you have that confidence, you do need to protect it. Even from me. Do not let me fill your head with something that, and I don't mean to, please know that, but don't let me fill your head with a tool or an approach that doesn't make sense to you or something that you would rather not do. Okay, so please know that, all right? And I truly mean that, because what we have tried to do from day one with Susan and with everybody is to lay out tools and an approach so that you can develop your own game. It will be different from me, and it will be different from Susan, and it just is. It's as unique as your thumbprint. It's very unique. And once you have that spot, you want to protect it. But I also want to go through some elements I think and I hope will help you discern to improve over time your consistency. Remember, you're not in competition with the market. You're not in competition with your strategy. We want to be dancing with the market. You want to be in a position where you can help the strategy, whatever that strategy is. Notice I'm not even mentioning one. I'm just talking in generic terms. And the more you do that, you're in a position to help the strategy do better, and then the strategy in turn can help you do better. Make sense? Okay. One of the things that comes up is momentum. Momentum. And it comes up in the context of what I hear, and I experience it. Every trader does. I just want you to know. And that is, man, I was on the right side and it was a great day, and man, I had the momentum. I had the market at my back. Right? Ideally. Hopefully, if you're using a strategy, you're not in a situation where, boy, I thought I was long and the market was down all day and I was long and I never had it at my back. Okay, so hopefully that's not happening. So we take that side of it out. But what does happen in the frustration is, man, yesterday was so great. I made great money and I was doing exactly the same thing, and the market went nowheres. And all I did go one side to the other side, to this side, to that side. The market had no momentum, up or down, right? We can talk about chop in a subsequent piece, maybe follow up on this, but I want to avoid using that word right now. I only want to talk about it in terms of momentum. Momentum. You either have it or you don't. Okay? The momentum is either there or it isn't. Momentum, in my view, you may differ, but I do think momentum can precede the price action. It's one of the few indicators that I think can give you a hint of what is to come. Whereas I don't think volume, people will differ with this. They may say volume does or this does, but momentum or the lack of momentum can, I think, precede price action. But how do we know? Here we have a 5-minute NQ. You're looking at this saying, oh, look at that. That's awful. But that also happens to be overnight, but it doesn't matter. That is sideways, very, very tight trading. Then we get this big move down. You want that big move up. And everybody wants that on every single trade, right? You want that big one, and then it, goes sideways. So what do we use to measure momentum? And what might you use now? Now, when we talk about the strategy trading that you've been doing, we encourage you for that first week to let the machine run in and out, right? No interference, just letting it run, see what you see. The next week, letting it run, automatic, in and out, and you just try to manage it. There is another piece to this now, though, okay? You can, and I do, set strategies on 3, 4, 5 markets, usually not much more than 5, and I will set it with confirmation so that the trades now are being presented to me, and I either accept the trade or I deny the trade, right? And then, ideally, I let the machine handle any losses, and I just, take the profit. So if you haven't done that, by the way, taken, a week where you just let the machine present the trades in a confirmation where it pops up and you say, yes, I will, no, I won't. You might want to do that. But what are you looking at? Okay, so this now either exposes, which is fine, your own individual trading skill, and it's going to be better. Trust me, every day, every week, every month, it does. Your knowledge, your skill, like anything, gets better and better and better. So I want to keep this really, really clean and really, really simple, because simple is good. The GPS near on the radar is a momentum indicator, and it's up close and personal. It's very sensitive, the GPS near. It's very close. So if you're trading on a 1 minute or a 3 minute or a 5 minute or a daily, that GPS near is very, very close to the interval that you're looking at. And it'll tell you either the momentum is down, trending down, or trending up, or it got some pressure down or pressure up. Okay. The GPS distant is also a momentum indicator. And it takes a bigger view of your interval. So it could be a good thing. So we like to look at, the 1 minute. What is the 1 minute doing in the direction of the 5? Or maybe what is the hourly doing in the direction of the daily? That sort of thing. So the GPS distant will take a view of your momentum of whatever. If this is a 5 minute time frame, if I put the SMC GPS near momentum indicator, it's going to be very reflective of what's on here. Very, very much in sync. Now, maybe that's helpful. Maybe it isn't. Maybe it's just a little too active because I can see what I can see here, and I'd rather maybe look at a momentum indicator that takes a slower view. Make sense? A wider view. So in this instance, what I'm going to turn on here is what we call the SMC GPS distant indicator. And so let's do that right now. So I'm going to come here, edit study. If you don't have this, please let me know. So I have the altimeter paint bar on here. I have SMC GPS distant indicator. Right now, we're going to ignore this input. You may have it, you may not, if anybody has a question about it or want it, but we're going to keep it really simple in this video. And I'm going to turn this on. No, I'm not. I just turned up the paint bar. I'm going to turn that on. And now we have a momentum indicator, GPS distant, and a momentum indicator. And let's discuss what this is doing, what this is showing you, and how you might interpret it, and how you might use this to decide, yes, I will take that trade, no, I won't take that trade, or maybe, you know what, I think I will take my profit. That sort of decision on a comfortable basis. It's not real quick. It's not real fast. So let's discuss that right now. Okay, so I said earlier, momentum. You either have it or you don't. And it has momentum up and it has momentum down. And if there is no momentum, you would expect price basically just to be going sideways. So when this indicator is green, GPS distant, I would interpret this to mean that there is positive price direction. Prices are headed up and momentum is building. Momentum up. When price or when, I'm sorry, excuse me, when the GPS distant is red or below the zero line, I interpret that to mean that I have no positive momentum and I have negative or downward momentum. Okay. Now, as you can see, there are periods of time in which can be maddening that the momentum is shallow. Shallow. You know, I'm not a surfer. That was a scary thought. But if you're out off the coast of California and you're on your surfboard and you're paddling around and you're waiting for the next wave to come, and all you're getting are these little flat waves, and there's just not a whole lot of surfing to be done, right? Everybody wants that, right? So no one can say with certainty when you're going to get that. Or we can come back in time and we can see or that, right? But when you do get in momentum, just recognizing, if you can't, so it's twofold here. Let's save recognizing when that wave might come, but just recognizing what side you want to be on, okay, is one aspect, right? So anything above the zero is a positive momentum. Anything below the zero line is negative momentum. And then you do want to recognize when momentum is building, in this case, building down, you might want to be a hell of a lot more patient with your winning trade, right? You hopefully wouldn't ever even be in that thing long. When momentum starts to wane, you might be thinking, hey, maybe I want to take my profit and get on my little surfboard and paddle back out and hang around with the seals and wait for the next wave. And be patient. It takes time. So just recognizing that and slowing everything down, I think can be very, very helpful. And this is the tool that I would suggest everyone use if you have it. It is comparable, perfectly comparable to the GPS distant on the radar, on the swing machine. Now, how might we use this tool? Because I did say earlier that momentum or the lack of momentum can precede a price move. And how might that be? Well, one of the things that you can do, you don't want to overdo it, but let's just go, and it doesn't happen all the time. So, but I want to bring your eyes to something. We have to go back and look for an example. Okay, so what I like to do is look at the distant momentum indicator in relation to price, in relation to the price action. Not so much, the paint bar is fine, but I'm interested in the price action. So let me show you what I mean. When I see very downward momentum, and I see price right here, and then, maybe I chose not to get involved on the long side. And then when I see price go make a new low to this, right? This was a low, but it was this area here. If I was to draw a perfectly horizontal line, which I could do, maybe I should. Let's take a minute and do it. Let me just grab a horizontal line. And I'm just doing this because you will see, you will see this, right? So I'm going to just color her red. And we have another lower low, right? Right in here. And so let's take this drawing and put a horizontal line here. And this is the sort of thing that you want to be patient for and watch for, and that's why I'm pointing it out. That is the new low right there. If you take your cursor and you look, you can see on this move, it had considerable momentum down. Now, the momentum is waning down. I don't want to, sometimes we might, do a counter trade, but for the most part, I wouldn't try to buy that. I might use it as my excuse to take profit. But now over here, I begin to look and say, hey, she's making a new low. What if I did take it short, I'd want to see the momentum continue and to try to get as low as that, if I did that. But better yet, what I prefer to see is when price goes lower here, what does the momentum do? And you can see at this low, the momentum wasn't anywhere near as good or as strong as it was here. That is divergence. And we can certainly draw a trend line if we want to, but I'm not going to say that I map it this closely every time with let's get a trend line. Here it is here on the chart, but my eyes see this. You will always, I say you will see this more and more, and I'm going to color this one. I'll just color it yellow, and it's kind of a caution, like, we're selling, we went lower, but we don't have the same momentum. Therefore, it's probably done going down, and guess what? I might be more interested in doing what? Getting long. And this would have been a decent little trade. Of course, then we come down. And so we could go on and do this over and over. You're going to do it over and over and over, day in and day out, and you're going to get a hell of a lot more practice than somebody as a swing trader. But this idea of reading the tea leaves on momentum and looking for the momentum to be waning, and I'm going to clear all that, hopefully. Let me remove that trend line. We'll remove this, and we can see it also on the long side. And so I bring your eyes to it. It doesn't happen every time. Let's clear that. And sorry. But you want to be patient, and when you see it, you want to know what it is. So when we come over to here where price is, I have upward momentum. I'm only thinking here, I am not thinking I want to fade this and I got to take it down. I would rather just see this, give me a dip, and I would rather buy it. So I would have wanted to be a buyer here, buyer here, buyer here, and still want to be a buyer. So, and I just erased the word momentum. Didn't mean to. If you can just stay on the positive side of momentum, or on the negative side, stay on the right side, I think you will do better. I think that if you have an eye for the relative performance of previous and immediate up moves or down moves, can help you discern trades that you might want to wave off or profits you might want to take. And the tool that I would recommend or suggest that everyone should have in their tool box is the GPS Descent. Now, one of the things that you can do, you can be trading a 1 minute and a 5 minute NQ, or whatever the market is. But the night before or the morning of, you might want to take a larger view, because picture yourself once again, you're on that surfboard and you're paddling and you're looking immediately behind you for the size of the wave, and you see a little 3-foot wave coming in. But maybe if you got up on your knees on the surfboard and looked just a little bit further back, a little bit beyond that 3-foot wave, maybe there's a nice 10-foot wave rolling in. And maybe you want to just ride over it and take the bigger wave. How might you see that larger wave? You could just simply increase the time frame. And so let's do that. And I have no idea. I haven't done this previously here on this specific, market right now. And we look at a 15-minute view. Maybe you want to see the hourly view. Maybe you're not going to trade the hour, but I want to know where I am. And now let's just take a look at some things here that actually come out. Look at this, right? Look how low we went here. Look at that. They weren't having it. There was like no momentum here. There was no momentum selling. Look at them. See, there was a big momentum here, down, but there wasn't any here. Could have given you more confidence to get long and to stay long. And this is on a 15-minute, so this isn't going to turn around every 5 minutes. This is going to be with you for a while. So maybe you want to, it's always a good idea, the night before, the morning of your intraday trading, is take a look at the larger intervals a little bit beyond what you're going to be trading, just a little bit. Could be a 15-minute, could be an hour. I don't think you want to, if you're trading intraday, go back a week. I mean, look out to the horizon and see something out there that, may come in today, maybe 3 weeks from now. I don't think we want to go that far out. But momentum, and see how you do. But, setting one's expectations with any strategy, the strategy is to help you, and you're there to help it. And what we asked everybody to do was to let the strategy run on its own so you could see what it could do, see what its strengths were, see what its weaknesses were, come back the next week, try to help it, and at the same time, once again, see what its strengths are, see what its weaknesses are, but also a little self-assessment. Okay? You don't want to have all your expectations on any one particular strategy. This is a concerted effort or a team effort. You're working with the strategy, and the strategy, you're working with it, it's working with you. And this notion of momentum is an important one. So let me know how that works out for you. I wish everyone the best this week. And you know what? We'll probably upload this to the internet. Why not? On YouTube. This, by the way, the GPS Distant is proprietary to us. It is not a MACD. We think it's much better, but it is not a MACD. It is a histogram. And this particular paint bar is the Zinger paint bar that does match Swing Machine. Good luck, everybody, this week. I hope it helps. Keep me posted. And we are going to do another video later today, this week, talking about CHOP. That's something different. And what our tools are there to help identify CHOP. And CHOP is something that maybe in the beginning might be your bane, your hate CHOP. But actually, we're going to show you some things where you're going to love CHOP. You're going to look for CHOP. CHOP is opportunity. Good luck, everybody.